Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 27th of September. So I've seen a week of very strong consolidation on a lot of the majors, and they are at very, very important levels as well. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and you can see we've had a very, very interesting week in terms of movement. We can see at the start of the week, it broke through the previous highs here that were causing some concern the last two times it touched it. And then we did break through and we hit the 68.80 all the way up to 69, and then sold off again quite sharply all the way down to the low 68s. And in this last session, we can see we've had another really big rebound all the way up, and actually almost closed where it opened again. So almost an engulfing candle on the way up, which is a very, very strong sign at a very heavy level of resistance. You can see if we take it right out, this is a very important zone. You can see here we had problems in December of 23. We had problems in July and June of 23. And more action at this level here in 22. So it's an extraordinarily important level, these 68.80 to 69 cent mark. And it's proving to be the one that might break through. We're looking at very, very strong movements. It was a little bit chaotic when it did sell off from there. You could think, well, maybe it's time again to move down. But it did fully extend and push past it again. So really what we're looking for now is move back up to the 70. The 70 is a very strong level as well. It's a round number, and a lot of people gravitate to it. So now that it has actually basically solidified its movement up, you'd be looking for smaller time frame, higher highs and higher lows. You go to the 15-minute chart or the 1 hour chart, depending on what time frame you're trading. As you can see, very, very easy. Pullbacks to the 20 moving average all the way up, and very easy to trade. So as much as that candle looks like a massive candle, and how do you trade that? 15-minute gives you about 15 entries. So very, very basic to trade. All we're looking for now is a continuation of that, of course. We look for a series of higher highs and higher lows inside the session, especially with aims now to get up to that 70 cent mark, which is just a little bit higher than when we are here. But a very important zone nonetheless. We can see that the 70 is the next marker. We'll pop a line there, and that will be our new target now that we've got consolidation above this level. All right, I'll move over to the US dollar CAD. And again, this is an interesting one that actually found support. It's bucking the trend a little bit. We did find support where we really needed to find support. There's no question about that. We wouldn't have wanted to sell it any lower than 134.50. It has been able to get itself back up above that level in the last couple of days. And today's a little bit of a nothing day. You can see that we've got basically a very small doji there. What we're looking for now is an extended movement up to the 20 moving average around that 135.50. I could see it starting to pull up. It's a very, very heavy congested zone, this zone here between 134.50 and 136. So I could see it getting to about the mid zone. Midpoint would be probably where I'd be aiming for if I was scalping it. 20 moving average should be there by the time it gets there. And could be potentially a double bottom as well if the markets do reverse in a bigger way. It's got two bottoms here that could certainly play out. You wouldn't be trading this pattern right now, of course, but you could have an aggressive attempt at getting it halfway up the one of the sides. There is definitely MACD divergence there. You can see there we've got big divergence on the MACD at this level, so it's Class B bullish. A good chance to potentially scalp it up to the 135.50. All we're looking for is a series of higher highs and higher lows, like a continuation again on a 15-minute chart. I'll auto correct that so you can fix that. What we want to see is this pattern here. Okay, a series of higher highs and higher lows out of this zone. If we get that from this consolidation zone, which is what you can see it's happened in today's session, then we're looking for that move up to that 135.50. So pretty straightforward on the CAD. We'll go over to the US dollar yen. We'll go back to a daily straight away. And as you can see, this is going on and doing what we needed to do. This is great. The morning star has played out very, very nicely, reversed the trend. Still a little bit more to go to hit the targets that we really think it can reach. The 146.50-ish area is a really good level for this. What we're looking for now is just continued momentum. So we're trading well above the moving average now. We've got that daily close. See, we had those two failures attempting to go long, but that got basically erased by the long range candle that closed above it. And we've had a bit of wick action today, but yeah, realistically, we're at a good level already, and all we're looking for is a little bit more momentum to carry it through to the 146. If it rolls over here and starts to trend down, I wouldn't be aiming too low. I think that the potential now, I think this sequence looks like it's about to break, and we've got momentum really showing us that. So we want to make sure that we're careful on not going shorter. If you are going short, you want to be very, very careful and try and get in and out very, very quickly. I think the longer term target for this one is around that 146.50. Good trading on the end, really good trading. All right, dollar index. This has been very, very sideways, obviously. Consolidation central at around that sort of area that we know is extraordinarily important, the 100.5 level. It's basically touched this level about 8 or 9 times in the last 10 days. You can see it's obviously very important. It's fighting the good fight. The 20 moving average, however, is bearing down on it and pushing it down, not allowing it really to go up. So it's feeling pressure from above a lot closer than it was previously, obviously, as you can see through there. So really, it's a matter of what it's going to do in terms of breaking that 20 moving average. If we get a close daily above the 20 moving average, I'd be looking at moves back up to that 102. But a daily needs to close above that 20 moving average in order for me to be confident that's going to happen. But of course, if we get a breakdown below the 100 and sort of 30 area, which is a new low from here, then I think the 99.60 area is going to be the target that we're going to be wanting to play for. So really, it's trapped between a zone. It's going to bust out one way or the other. It's just a matter of which direction. Both of them are live trades, I think. So it's just really picking your side and waiting for it to happen. And when it does happen, jumping on board. Not bad trading there. The euro, of course, is the one that wants to take advantage of that. And you can see the consolidation at around this one. 1180-ish area. It's had the same interaction as the dollar index, obviously. It's had about 8 touches. So realistically, again, the moving average is bearing down on it and putting pressure on the ceiling at around that, call it the 112. We need very similar rules to the dollar index. If we get a break below the 20 moving average, we're trading down to the 1010 as a rule. That's what we'd be looking for, opportunities to trade lower high and lower low sequences down to the 110. If we get a close above 112 for daily chart candle, what we were looking for then is a bigger move, and that extended move could go to 1250 and 113. It's really out and broken out properly if that happens. So that would mean the dollar index would need to be around that basically 99.50 area that we talked about over there on the previous chart. So really, it's coming down to what happens from here. A break above 112, we start to look for 50-point moves up, and a break below the moving average, below the 110 or the 110 sort of 60 area, and then we're looking for a move back down to the 110 flat. So pretty straightforward. It's just really having to wait for that opportunity, but we've seen a lot of consolidation this week. And finally, we'll have a look at the S&P 500. Obviously, an all-time high week. Basically, every day printed a new all-time high, but very, very small moves. Okay, so it's one that we're waiting for a bit of a pullback to this level here around that one sort of 56.50 area. If we pull back down to that zone, then we're looking at a potential rollover up the 20 moving average. That would be my ideal. The 20 moving average is there now. If we see a pullback to this level around about 100 points, I think that would be a good level to start looking for a new momentum shift. If we get a series of higher highs and high lows at that point, then we've got something to aim for, the previous highs, of course. If it continues up and keeps grinding up, probably the 5800 is going to be the target. That would be more than likely where the market will gravitate to. But don't take that as an absolute certainty before it pulls back. Just because it looks like it should go there, it doesn't mean it will. And it is only grinding. This week's basically it's a consolidation week, really, because it's ground its way only a handful of points closer and closer every day without any real serious moves. And today's actually the first time it actually pulled back a little bit. Not very much, but enough to give it a little bit of movement. So very interesting trading here, but I think it's at a very important zone where you've got to pay attention to what the price action is doing. In my mind, I'd like to see it back at 56.50 and then look for a roll bounce off that, then push it up to that 130 points odd. If it keeps grinding up, look for resistance at the 5800, which is a round number that's never been reached before, but it's a number that, the roundness of that number would take care of the resistance for us. So we had a great week's trading. We've seen some fantastic trades in between levels over the last few weeks, but we've seen a lot of consolidation this week. So look for potential breakouts in the next session or early next week to see where we're really moving with a lot of these majors and the key indices. Thanks very much, and I look forward to seeing you all next week.